Hello and welcome back to Explain the Charts, where we take a look at the charts and break down the market's movements to help you better understand the trends and make informed trading decisions. Today, September 17th, 2024, we're focusing on Apple Incorporated, and we'll be exploring both the current news surrounding the company and the technical analysis of its chart data. Looking at the recent Google search results, we can see a lot of focus on the potential impact of weaker demand for the iPhone 16 on Apple's stock. Analysts have expressed concerns about pre-order numbers, which have reportedly declined compared to the previous iPhone generation. However, it's important to note that this is just one data point, and the overall market sentiment towards Apple remains relatively positive. Investors are also closely watching the Federal Reserve's interest rate decision this week, which could have significant implications for the broader market and tech stocks. While the iPhone 16 demand concerns have generated some negative headlines, Apple remains a powerhouse in the tech industry with a strong track record of innovation and financial performance. The company continues to generate substantial revenue from its diverse product and service offerings, including its Mac computers, iPad tablets, wearables, and digital content stores. Let's take a look at the daily chart for Apple and see what the technical analysis tells us. Overall, the daily chart paints a picture of a stock that's been trending upwards in recent months, despite the recent dip. We can see that the price has been consolidating above a strong support level around the 170 mark. This suggests that the bulls are still in control and that the stock has the potential to bounce back. However, there are some indicators that point to potential short-term weakness, such as the bearish divergence between the price action and the relative strength index, RSI. The RSI has been making lower highs while the price has been making higher highs, indicating that buying momentum may be waning. One area of particular interest is the recent price action around the 215 to 220 level. We saw a strong resistance level at this range, with the price struggling to break through. The fact that the price has pulled back from this area could suggest that the bears are gaining some control and that the stock may be headed for a short-term correction. However, it's important to remember that resistance levels can also act as support levels and that the stock could potentially bounce back from this area in the near future. We'll need to watch the price action closely over the next few days to see how the stock reacts to this recent pullback. If the price can break above the 215 to 220 resistance level, it would be a bullish signal, suggesting that the stock is ready to continue its upward trend. Let's switch to the hourly chart and see if we can get a better understanding of the short-term price action. Here we can see that the stock has been in a downtrend for the past couple of days. This downtrend is confirmed by the downward sloping trend line that can be drawn on the chart. The recent pullback from the 215 to 220 resistance level has also been accompanied by decreasing volume, suggesting that the sellers are losing some momentum. This could indicate that the short-term correction may be coming to an end. However, we'll need to be mindful of the fact that the stock is still trading below the 215 to 220 resistance level. If we look at the 15-minute chart, we can see some evidence of a potential reversal in the short term. The price has bounced off the 216 level, a key support level for the stock. Additionally, we're seeing some signs of bullish momentum with increasing volume and a positive RSI. The 15-minute chart is suggesting a potential short-term bounce back, but we need to watch the price action carefully to confirm this. The long-term outlook for Apple still appears to be bullish, with the stock still trading above its key support levels. However, the short-term outlook is less clear and could be influenced by the Fed's decision this week, as well as the ongoing iPhone 16 demand concerns. In summary, Apple is currently facing some headwinds from the negative news surrounding the iPhone 16, but the long-term outlook remains bullish. The stock is trading above key support levels, and we're seeing signs of a potential short-term bounce back. However, we need to keep an eye on the Fed's decision this week and the overall market sentiment to gauge the stock's potential direction. Key price levels to watch include the 215 to 220 resistance level, which could act as a barrier to further upward movement, and the 170 support level, which could offer a floor for the stock's price. If the price can break above the 215 to 220 resistance level, it would be a strong bullish signal, suggesting that the stock is ready to continue its upward trend. Conversely, if the price breaks below the 170 support level, it would be a bearish signal, indicating that the stock is losing its upward momentum. Other factors to look for include the RSI, which can provide insights into the strength of the current trend, and volume, which can indicate the level of buying or selling pressure.